Wanted to touch base on some of the proposals that Fannie Mae Freddie Mac has been doing. I've had clients who have 700 credit scores and they don't qualify for a conventional financing because they may have very limited credit history. They're talking about a 50-year mortgage. Two, they're talking about a portable mortgage. Also, an assumable mortgage is a lender going to go back in time and make those 3% interest rates assumable? No. Why would they? There's no reason why they would do something like that. Not everybody should do it because the Real Estate Show with Pat Lopez, where we talk everything real estate. For this show, we're going to talk about the proposed changes that Fannie Mae and Freddie Mac are talking about. Number one, they're talking about a 50-year mortgage. Two, they're talking about a portable mortgage. Also, an assumable mortgage. Last but not least, they're talking about credit scores below a 620. So let's jump into a 50-year mortgage. Do I think that's going to happen? What are the pros? What are the cons? Do I think a 50-year mortgage could happen? Absolutely. You have a 30-year mortgage, you have a 15-year mortgage. Yes, there's going to have to be some changes, but yes, it could be a viable option for some people. But it's going to be a fringe type of product. Not everybody should do it because you're not building equity in the home. You'll be in the home for years before you really start paying down the loan. So it's not going to be right for everybody, but will lower your payment. Sure, that could help with affordability, and hey, it may knock $100, $200 off a month. But remember, when you have a 15-year mortgage, your interest rate's about 0.5% lower than what your interest rate is when you have a 30-year mortgage. So on a 50-year mortgage, hey, you may be paying 0.5% higher in an interest rate as far as that is concerned. So it'd be very interesting if they roll that out. Could it work for some people? Absolutely, but it's somebody that has an exit strategy. Somebody turns around and said, listen, I really need to get into this house. I'm anticipating a raise in the next year. This is something that will get me into this home, but in the future, I will refinance into my forever loan. So will people do it? Will be an option? I think so. Now, assumable loans. Well, we already have assumable loans out there. You have VA loans, they're assumable. We have FHA loans, they're assumable. But right now, for conventional loans, Fannie Mae, Freddie Mac, they are not assumable. So could they be assumable? Absolutely. They once again would have to change some wording in the contracts and approve that change. So that is possible. But right now, do I think that is going to be a big option for people? No, because who wants to assume a 6.5% interest rate? That's what somebody would be doing today. Now, is a lender going to go back in time and make those 3% interest rates assumable? No. Why would they? There's no reason why they would do something like that. They'd rather have a 6% interest rate as opposed to a 3% interest rate. So do I think assumable loans could happen? Yes. Do I think it's beneficial to, mass public? Probably not, because they would be new business, new contracts moving forward, or new mortgages. Now, portable loans, same thing. Do I think that is a viable option? Well, yeah. If I have a 3% interest rate, would I like to take that interest rate and apply to my new home? Absolutely. But that's going to take the lenders to rewrite contracts that were done already. Do I see that happening? No. Really don't see that happening. And once again, the same thing with assumable loans. Hey, if I have a 6.5% interest rate today, do I really want to take that with me on the next loan? Most likely not. Most likely, interest rates may drift down a little bit in the next couple of years to maybe we're in the low sixes, high fives, and that's not going to be something that I see many people doing. So out of those three things, I think the biggest chance that will be a little bit more mainstreamish will be the 50-year loan. But once again, even that, I really don't see a lot of people jumping in and doing that. Yeah, it's a niche type of product, just like most people don't do a 15-year loan. They do, most popular is a 30-year loan. So I think that'll be the same thing for the 50-year mortgage. Now, credit scores. Been getting many phone calls. I have realtors calling me up, buyers calling me up, telling me, hey, I hear I could have a credit score below a 620 and do conventional financing. Is that possible? Well, yes, it is possible, because as of November 16th, they said, Fannie Mae, Freddie Mac said, hey, you can have a credit score below a 620. But understand, you always have to qualify for the loan. I've had clients who have 700 credit scores and they don't qualify for a conventional financing because they may have very limited credit history. Their credit scores are good, but limited credit history. And other compensating factors aren't there. So let me explain. The way it works is this. When you are applying for a loan, every lender is looking at 3 different areas. Area 1, what are your credit scores and your credit profile, your credit history? What does that all look like? It's just not credit scores, it's your overall profile, your credit profile. Second part of things, they're looking at your income versus your debt. That's debt to income ratio. So they're looking at that. And last is money in the bank for down payment and closing costs. So those are the 3 areas. So let's say my credit score is good. Let's say I have a 700 credit score, but not a lot of history on credit. It's newer credit, but money in the bank, don't have any. I'm getting money as gift, and I'm doing maximum financing, maybe 3% down, 5% down. So my assets aren't strong, and debt to income ratio, let's say my debt to income ratio is over 45%, new at a job. Well, guess what? Out of the 3 areas that we're looking at, 2 of them are weak, and 1, which is the credit score is good, but the overall profile is weak. So when you're looking at that, you take all that together, I could have a 700 credit score and still not qualify for conventional financing. Where I see people being below a 620 credit score and getting a conventional loan are people who have strong compensating factors. Let's say they're putting 20, 25, 30% down on that house. Their debt to income ratio is low. Okay, and they have monies in reserves. After putting that 20, 30%, 25% down, they have money left over in the bank. Okay, and guess what? The credit score, the credit history and the credit scores may be the weakest link, but the other 2 areas are strong. So understand, you need those compensating factors to work. I really see people putting larger down payments are the ones that are going to qualify. And just remember, just because the guidelines say you could have below a 620 credit score, it's not pass fail. You have to qualify, and they look at globally your whole situation to see if you qualify or not. Once again, like I said, I had many people call me up, ask me those questions. Hey, the 620 credit score. Once again, it's not a pass fail. It's your global overall situation. Some people it will work, some people it will not. But guess what? If you have 1 or 2 people that now qualify for conventional financing, great. It's good for them, and maybe that'll have 1 more or 2 more sales. Now, why is all this stuff going on right now? It's affordability. It's the administration is trying to think of ways to make housing more affordable for the average person. Affordability. There's been NAR came out. Zillow, Realtor.com, everybody's coming out with the average age of first-time home buyer is now 38, 40 years old, which is about 10 years higher than it was 20 years ago. And people are complaining that things are just too expensive, too high. And guess what? From 2020 to now, housing went up over 40%. So that's a huge leap when incomes may have only gone up 10%. So 40% on the price of houses, 10% appreciation or raises as far as income is concerned. So affordability is the issue. Ultimately, it's going to be the supply coming on board, but it's the right supply. It's the supply of affordable houses. Sure, you could build $1 million house, but guess what? The first-time home buyer, average Joe, may not qualify or make enough money for that $1 million house. We need more houses in between the 200 to 300,000 price range, and that's going to be, the $1 million trick here of getting builders to build those houses, and also have buyers that are in homes where they have the 3% interest rate turn around and say, you know what, let me put my starter home up for sale, let me get out of it and buy my forever home, and get that 5, 6, 7% interest rate depending on the time, and relinquish that 3%. So we have to free up existing homes, which is hard because people are really holding on to those lower interest rates, and then having builders give the incentive to builders to build affordable homes. So that's really where the trick's going to be. So just wanted to touch base on some of the proposals that Fannie Mae Freddie Mac has been doing. Got a bunch of phone calls, so I figured, hey, let me just do a really quick pod and give some of my thoughts with it. 50-year mortgage, I think that's probably the most doable option out there. Will many people do it? Probably not. It's going to be more of like a niche type of program. The other items, I just portable loans, assumable, I just don't see them really getting any kind of traction as far as that. And then, of course, the 620, hey, every now and then somebody will, fit those parameters of being over a 620 credit score and qualify. Hope you enjoyed the show. Remember, follow the show on Facebook and Instagram, and of course on YouTube, The Real Estate Show with Pat Lopez on YouTube. I'm going for 50,000 subscribers. Help me out. I'm a little bit over 40,000 right now. Let me see if you guys can get me over the top. I really appreciate all your comments. Your likes really helps the algorithm. Hope you enjoyed the show, and I'll see you next week.